Hi, this is Randy Finning with Right Side of the Chart, and this is a mid to late session update for Friday, April 4th, 2025. It is 2:19 p.m. Eastern Time as I'm starting the video. As I said in the last post, you guys are probably videoed out. Comments have been quiet today, and I get that. But as I told you, when things are moving fast, that's when I post a lot, do a lot of videos. I've made a point, done my best to get out a lot of static charts for you today. I know those are a lot easier for a lot of folks that don't have time to watch a video or the inclination. Remember, you can always increase the playback speed in the videos up to 2 times, anywhere in between, or skip ahead to get to what you want. We've got somebody on the site, thank you very much, who's summarizing or listing the transition points in the video, showing you what I covered. You can check that under the comments section of any video, as long as they continue that. Much appreciated. Okay, I'm going to give you my thoughts as we head into the weekend, which I've been doing. It's what I do every day. And my thoughts are this. We have now fallen quite a bit. To say that we are oversold now is a bit of an understatement. We were oversold a couple weeks ago, as I highlighted there on the daily chart. Again, I'm going to talk different time frames. This is a daily chart. We had oversold. We had a bounce, which was anticipated to backtest the 200s, objective re-entry point. Now, here's what we've done. We're at support, as I covered this morning. I mean, we're basically where we started the morning. We haven't even taken out. I just got a post out to you earlier today. The index is slightly punched down below their pre-market session lows, but I don't want to say surprisingly, just factually, it says what it is. The Mag 8, all of them, when I made that post, didn't. Apple has just ever so slightly kissed and undercut, as I'm talking to you here, undercut that previous low. Here, let me show you. I can slide over here, take this and go over here and show you that right here we have Apple on the left. It's a streaming intraday chart. There's the pre-market low, slightly undercut, but there's Amazon still way above it. There's Alphabet. Again, the shaded box, if you watch the last video, this whole shaded gray area there is pre-market. In the black area, I don't have my box tool fired up, but assuming this was a box tool, that's the regular session where we're at now. So you can kind of see the time. Well, they're not on. I don't have the time hash marks put on there, but either way, you can see above the recent low, that's Alphabet. There's the symbols. If you can't see them, Amazon, Apple on the left, and Amazon, Alphabet, Microsoft, Meta right there. Here's NVIDIA down here. They put in the low of the day right after the open, but still above it. And Tesla. I mean, look, guys, don't get me wrong. And here's Tesla. These guys are sucking wind today. But again, that's interesting to note that the all Mag 8, well, now with the slight exception of Apple, again, and that may change. We're going to dump into the close. That is going to change. They're going to take out new lows, and the previous lows. And if we can't rally soon, we've got to rally. We still have a little over an hour and a half to do it. If it's going to be, as I said in the previous post I got out to you, if it's going to be a big rally, one that the only thing that I think would turn the markets green by the close today, and that's a hell of a rally. I mean, we'd have to just to quantify it for you. Go to the 1 minute chart. I gave you let's go to these 5 minute charts. One more thing before I know I'm squirreling right now. As always, I will follow up quite often under a post if there's additional commentary, anything related to that. And I got you out these charts right away. I gave you the levels that I think will most likely spark a rally, whether they're taken out today or next week. Again, now, if it goes beyond early next week, those levels are kind of erased, if you will, because these are 5 minute charts, so they're just near-term stuff. They may come into play then, may not. But if we go down another 5-10% in the markets, forget about the 5 minute charts where they're at today. I'd have new levels at that point. So there were the levels, and as I said, no breakouts, no rally, at least not today. And then I went on to say, here's the 5 minute charts. I wanted to, again, get that post out to you pretty quick. And this is what it looks like. There's IWM, closest to taking out its downtrend line. But again, it's only going to go so far without its big brothers, meaning SPY and QQQ, the large caps, going up. Okay, so you can see the level there. That's the 184-ish level. And so basically, what we're looking at, that would pop and get you back into the gap, and then there's zero resistance right here because you have a big gap between there and there. So that would be the rally. And again, may or may not happen today. I have no idea. Obviously, the clock is ticking. The odds are getting lower and lower every second of the day right now, every minute, because that would be here. Let's get to the live charts. Let me just show you these that I gave you. There's SPY. There's the levels that need to go. To enter the gap, you really got to get above 526 right there, and then QQQ. To enter the gap, and that's the level I gave you, about 440.21. And so let's just talk about that again, whether it's now or early next week, and if not, we'll look at something else. We would have to rally just to get up there to test the bottom of today's gaps, 3.21%. If we were to enter the gaps, again, I said this earlier in that post, that last post I got out to, the only way this is going to happen, in my opinion, most likely is a news event, something on positive on the tariff front, something like that. That's about a 6.6 rally from where we're at right now. So unlikely at this moment, but again, likelihood and probabilities increase in real time if and as technical levels are taken out. Start going to new lows. You're still going to have positive divergence here, and that's why I said on those charts these could continue to Monday if we park not too far below or around where we're at right now. We're still at the same long-term support that we opened at this morning, those same key Fibonacci levels. So if market closes, unless the market were to drop another 5, 6, 8, 10% today, it's not going to change my outlook from what I said this morning. So far, this is the open right here. Here's today's open. This is the post opening low right here, right? And all day we've just sat like a wet hacky sack you dropped on a floor. I talk about reactions, defining those as one of two things. You go to the long-term charts. Let's do that. Let's go to the daily. Let's go to the weekly chart for. So there's that support level, old T2 level. You can look at it here. We'll go to the daily. So we opened, we fell down, we opened, and we've stayed there. We've been there all day. So if this is where we close today, and let's just hypothetically say the futures are muted all night, Sunday night into Monday morning, then we're going to open where we did, and then nothing's changed technically, right? Now, between now and then, something probably will change. I doubt the futures are going to lay idle over the weekend. And we're probably going to see something happen into the close. I don't know. We're down pretty big. As I also added in there, I keep talking about the potential for bounce. And why do I keep doing that? Why, if I have these longer term targets? Well, number one, I've spoken many, many times, and I continue to reiterate the difference between a long term swinger trend trader. Stick with your plan. I haven't waffled on that. These are, I'm showing you levels that are likely to bounce. Little game, just like we game this one here, but trying to game a bounce. We've had the potential since yesterday. We started hitting support. We're a little bit below that, still at that support level I talked about, a little more downside, which we got today. So I'm going to just tell you okay, so longer term, like I said, nothing's changed. You're just going to have to ride out counter trend rallies. There will be some if you are holding out for the prize being my final target down there, 50-something% drop in the NASDAQ 100. We're not going to get there tonight, tomorrow, next week, even next month, most likely. It's possible to take an outright, one of the worst market crashes in history. And I don't even think we can do it. A lot of people worry a lot about market crashes. And I've seen this over the years. I've been doing this long enough. And they start talking about Black Monday, 1987, and 1929, all this stuff. Well, guess what, guys? Can't happen anymore. There's things called circuit breakers that went into the markets after 1987 and still exist today. They won't let it happen. Now, you can get there. You're just not going to get there in one day. Black Monday was a 20-something% drop, single-day drop in the S&P 500. Can't happen anymore. Circuit breakers will stop and cool trading down for, I think, an hour when you hit the first circuit breakers. And if you go past a certain percent there, I'll have to look up the numbers. They shut trading down for the rest of the day. So you can get there. It's just going to take a little long. You're not going to get there in one day. So one day would be on QQQ to hit my final target. We'd have to drop 38%. And again, that due to circuit breakers, that can't happen in a single day. But so the risks that I warned about in this post today, if we don't bounce, if we don't get that short covering rally, I wish I had not a crystal ball, but X-ray vision in the market to see exactly how many people are short right now. And we know that the short interest has increased, but I know that inherently at any point in time, there's a tremendous amount, a multiple of multiplier larger of longs in the market at any point in time. Most traders are long. A lot of people don't even know what short selling is or how to do it. So, with that being said, we know that more and more, people are wanting to short this market now and buying SQQ and those type things. But as I said here, if we dump in the final hour trading and we stay down as we head into the end of the day, there's a very good chance we can see that selling just push into the close due to margin call induced forced selling. What is that? At the height of every bull market, margin interest is at or near record highs. We've seen a little abatement off the previous highs this time around because of the proliferation of leverage index funds. So those don't count. You buy SQQQ, it doesn't count against the NYSE or FINRA now, FINRA margin short interest, because you're not short SQQQ. They are using derivatives to short the market for you, but you're buying, i.e. going long SQQQ, which is an inverse 3 times short on the Nasdaq. So that's skewed the old margin. Back in the day, you wanted to short the S&P 500 or the Nasdaq 100, you shorted it. You either shorted futures or QQQ or SPY, and that was it. And then now they have all these proliferation of inverse and leverage inverse ETFs, and make it easy to short it just about anything you want by not even having a margin account, which you used to have to short. So wow, going back to that. So what does that mean? Okay, so let's just stick with my not hypothesis, but the facts that most assets held are long, and especially at the end of a bull market, everybody's chock full of margin again, because they see their Nvidia and their SMCI and their Apple going up and up and up and just blowing away. And okay, so I'm making 30% a year last year on my tech stocks, 40, 50, whatever it is, some of them 100. Why don't I just borrow? My broker will let me. I have 100,000 in my trading account, my investment account, but my broker says I can buy up to 400,000 a stock at a low rate. It's called margin, and so people do that, and they buy instead of 100,000 QQQ, they leverage up, and so that works in reverse, because now when it drops, your account value goes from 400 to where would it go now if you were, let's just say, margined up on QQQ. In just the last few weeks, it's down 21%. So now you've just cut that down by nearly a quarter, over 1/5. And so then what happens is you've lost now, let's say if you did 400,000, then you've lost, what did I say? Oh, so over almost 100, a little less than 100,000 there. Remember, your account balance was 100, you've blown up. That would blow you up right there, because the value of assets you have in there. So margin is a dangerous thing for those that do not know how to use it or understand the risk. And so then what happens is brokers, and believe me, I used to be a stockbroker, I'm very familiar with margin calls. But I wasn't the one issuing them. I didn't work in the margin department. I was, a financial advisor. But old days, they used to pick up the phone, and I, as a stockbroker, would have to, hey, Mr. Smith, sorry, but my, trading, the margin desk just called, said you got to send me a check for another, 50,000. Your account's, overdrawn. Margin is, you have a margin call, and they'd have back then. Depending on your broker, I was with Merrill Lynch when I started. You can give me, get it in when you can, week, 3-4 days. Now they're instantaneous, and a lot of these electronic brokers out. And when I started in the business, it was T+5. That's how I'm dating myself now. Trade, meaning made to trade. I pick up the phone, tell my client, hey, you wanted to buy IBM? Sure. All right, you just have to have a check to me within 5 business days. That's a week. And you could buy the stock, and eventually they'd mail me a check and put it in the account. Nowadays, everything's electronic, so we've moved away from T+5. And so what happens, everything's quicker. And so where I'm going with this long rambling dissertation is most of these brokers, like Interactive Brokers, I use as gear professionals, they blow you out instantly. You're out by the end of the day. If they issue your account drops below that balance, you have two choices: either you sell it or they sell it. And they sell it, they pick what they sell. And so where I'm going is you got to be careful. That's where crashes come from, guys. We're there, so we're trying to thread the needle here. But I keep talking about the potential. If we can turn around, rally, if there's some good news on the tariff fronts, which eventually we're going to get. Remember, as I said earlier, guys, it's a zero-sum game. PGJ, I haven't updated in a while, but that was a long trade I gave you guys earlier last year. We went long China. We went long somewhere here. I gave you 3 price targets, all of which we hit. My third and final target was just hit. I've been meaning to update this. It was hit recently here. We went in, and it was textbook. This is where a hard reversal. We hit my final target right there. We went a hair higher and put in big negative divergence. So this is China again. This is the one I use. FXI is another one, and this was a well-placed stop. I went over my what was a DG trade I gave you earlier today. They got that one by a hair. This one you can see again from that trade. They never hit the stop. It was well placed, just out of range. Turned around. I can't remember, guys, honestly, where we went long here. I think on this breakout, if I'm not mistaken. So we made on that one, if you took it and stayed with it, 27, 28%. But then look at the beautiful, just the technicals. And that's often where my final targets are laid, where in advance I can kind of see where the trend's likely to end based on the projection of the preceding chart pattern. And so then we hit a divergent high. Then we went on to recently, I actually could take this trend line. I could put another one there, right there. Either one, both of them were taken out. But look, so what I'm trying to get at, and I said before, this is a bilateral zero-sum game, these trade wars. China knows it. U.S. knows it. And you can see China's in free fall right now as well. And so, sooner or later it'll get resolved. But we don't know when that'll be. So let me go back to the charts. Okay, so again, I just kind of want to get you my thoughts out. Oh, and the other thoughts. Now this, unfortunately, I'm about to say, it's me and my position, my situation. I've done extremely well gaming this thing down to this point. And so I'm at the point where I would rather start risking giving back some profits, starting to close out, even though my deeper targets haven't been hit yet. In other words, I'm not banking on the crash scenario. I'm open to it, but it's Friday here, so I'm not going to go home short on a Friday. Because if there's going to be a tweet, it's probably going to come over the weekend, Friday after the close, Sunday, something that could just explode this market higher. Market could implode too. But what did I tell you back here, right here? Couple weeks back, I said the RR to adding new shorts or to staying short is no longer favorable. I was favoring a bounce for the reasons stated. Right now, even though I would not, and honest to God, not in the least be shocked if this market just breaks down and crashes down and heads on down, where's my other board right here, to all the way down to my fourth target. And I'm telling you right now, I will most likely, unless I see something ugly in the end of the day here, I will most likely go home with a mild short position. I always reduce, if I have a good size position, which I do now, I will reduce significantly before a weekend, especially right now, substantially. This is when volatility is this high in the markets. This is a second day in a row QQQ has been down almost 6%. Volatility doesn't get much higher than that. So this is a time on the weekends, because you have zero control. You've heard me say this before, but if you're new to the site, I'll say it again. I primarily trade futures when it comes to the indexes, especially my main trading accounts. I have one big one, secondary one that's actually an IRA, but I can go long and short in that. That's what I like about it. It's the only place you can short, not by buying those inverse ETFs. You can short futures with a margin IRA account. Can't short stocks. IRS prohibits it. Can't short ETFs, but you can short futures contracts. So that's where I use that, and it's all then tax deferred. So anyway, I'm digressing. But in the primary trading account and then that side account, that IRA, I will I will trade futures, and one thing I love about them is they trade around the clock, other than a 1 hour shutdown every day from 5 to 6 p.m. Eastern time. Other than that, from Sunday evening when they start up until Friday evening, they trade again around the clock, 23/7 we'll call it, right? But they shut down Friday, and I have zero control. So where I was going is, if you know, and I set every day before I shut down, even this week, I set 2 times stops. I set the stops where I want, and then I have what I call cat stops, catastrophic stops. If I'm in a position, I want to give it some room, I'll set the maximum stop on a position just in case there's a crash overnight and I'm short or long a position. I know I'm going to be stopped out, because when you trade, not all futures have a lot of liquidity, but the NASDAQ 100 futures, ES, S&P 500, they're 3 in the morning. I don't mind. I'll use stop market orders instead of stop limit or stop loss orders. And that means it converts to a market order and hit. So I might lose a quarter point on the trade if the liquidity's low at 3 in the morning, but they're usually pretty liquid, especially when volatility's high like now. So it's a way to go to sleep and know, unlike ETFs, you go home QQQ tonight, and let's just hypothetically say, let's just play a game. The market crashes over the weekend. Sunday futures open up, start tanking. By the time they open up, we're down to my 4 target, 10% drop. Easily, I could see it happening. It's not my primary scenario, but wouldn't be surprised, at least based on where we are now. Do you want to wake up to a 10% gap? And ETF traders, unfortunately, you can't do anything about it. Because ETFs, even if your broker allows that kind of round-the-clock trading they've started with now, more so, they're super thin outside the regular up to 8 p.m. after-hours trading session and the pre-market trading session. And they don't allow market orders or stop-loss orders. You have to use limit orders. And again, I don't want to digress too much. There's a big difference. Stop-loss order says I'm going to put a stop-loss here. If the stock or security drops, hits that price, turn around and sell, but it turns into a market order at that instant. And I'll talk on that in a second. And then that's a stop loss. Stop limit is similar, except the stop limit says set a stop limit at, let's say, 410. If the price hits 410, the security hits 410, throws a limit order out on the exchange, says sell me at 410. You can sell me better. This is closing out a long position, so you're allowed to sell me at 411, or 410 and a penny, 410 and a quarter, 411. But you cannot fill that order a penny below $410. That's a stop limit order. And so what happens is longs just get, if you don't know what you're doing, you get brutalized on those things, because what happens, let me go to a daily chart here. All right, let's zoom in and talk what's happened recently. And this is just, I'm throwing this out as trading tips. All right, so here's, let's say you were chasing what I called the April Fool's rally, right? Remember, and I told you I was going to extend it one day into April 2nd, an extension of the April Fool's rally. So let's say you were the guy or gal that bought it here, and you said, you know what, I'm going to put a stop loss right below that low, because I'm willing to lose that much and not that much more. I think this market, I can see it rallying. It's going to go to new highs. But I'm going to be prudent. I'm going to put a 2-point, you can see the pop-up box on the left. That's a 2.5% stop loss order, just below, right under there. And I'm going to use a stop limit. Okay, so a stop limit, what happened is you opened up that day here. Where's open? Open was at 456.28. So you open at the top where that body, you open right here where my crosshairs are. That order's still there right now today. If you did a good to cancel order, it's still open, waiting. It's triggered. The sell limit order is activated, but it will not fill unless QQQ hits that price or better. And so now you're like, what the F? You've now lost from this point, or from that point you bought, again, hypothetically, you're now down 11%. Your order ain't getting filled, not anytime soon. And if the market drops another 50%, you're going to lose another 50. Okay, so all right, Randy, you're right. I'll use a stop order. I won't use stop limits. You're right, because they can get bypassed. They don't fill unless you come back to them. Well, same thing. You limited yourself to 2.5% loss, or so you thought in QQQ. But the reality is, you closed here. You opened right here the next day. You gapped down 4.17. almost double what you were allowing yourself, because stop loss orders immediately upon that price, the stop price being hit, they instantly turn into a market order. And in a fast moving market, you have what we call order imbalances. So that market opened. If you're lucky, you got filled at the open, but your order was also in line behind a lot of other orders, and we just kept going down. You may have gotten filled anywhere deeper in this big red candle. And so at least you would have been filled, but a lot lower in your price. So this is why I say you can't, it's almost impossible to effectively or accurately limit your losses with when you're trading ETFs and stocks. Futures, again, they have that Sunday night. Was that? Yeah, that was Wednesday. So the futures would have turned during the night. We were talking about that. That was Trump the day he announced, and that we hit my all-in kind of that landslide or whatever I called it, breakdown point. And so, but even then, futures would have turned. It would have moved fast, but you would have been filled on or around wherever your order was. So there's a crash course on order types, and just so you're aware of how big losses can get. And this is something really you only have to worry about mostly in a bear market. If you're a short seller in a bull market, stocks, I always say stocks tend to fall, and you've heard me say this dozens, if not hundreds of times over the warning of this, that when we turn, when we start going to my targets, it's going to be a fast down, because stocks almost always fall a lot faster than they rise, often wiping out months or even years of gains in a matter of days or just weeks. It's just the way it's always been. You can go back to any point in time you want. You can go back to the 2007 and 9 bear market. You can go back to COVID bear market in 2000. 2020, you can go back to the dot-com bubble after it burst in 2000, I'm sorry. And you can go back to any bear market you want. That's just one of the constants. So got to be fast. So back to what I was saying is, my logic is, yes, my longer term targets haven't been hit, but for all the reasons I've stated before, I think the RR favors being long, and I will go home long into the weekend unless something really crazy happens between now. We still have a little over an hour in the close, and it's going to be a relatively mild long position. Nothing crazy in case we do gap down 10%. That's not going to bust me up. I'll give back some of the profits that I've earned on the way down, but not even remotely close to what I've made. That we could gap down 30%. And 50% based on what I'm going to bring home, again, and it couldn't take away. And remember, I'm just pointing out the market here. We've had just been batting near 1,000 with natural gas this year, and you name it, whatever else there was. A lot of. But this is where I've been focused on in a lot of the individual stocks. And then, by the way, guys, I just want to reiterate it again. It could be a temporary thing, but Bitcoin, as I got that post out to you, is really holding up. And so if you're confused, yeah, technically it's an active trade. I'm not going to cancel the trade right now, but I threw it out and am long right now, that one as well. Now that can change if all of a sudden, remember, the thing about Bitcoin, it's been dancing on support. So if this support breaks, what you have here is what we call in technical analysis, this one right here, a descending triangle pattern right there. If you use this as the support line, you could come up like that, but that's the one I like. And so, if it breaks support, it's going to be ugly. But so far, it's holding support. And like I showed you before, it's acting more as a risk-off asset right now by holding up. It's not going up a whole lot. It's gone up a little. I've actually up the last 2 days. I was up yesterday, I believe, and positive. I'm up 2.84 right now on my Bitcoin futures. Is that what the percentage gain is? Yeah, over 2%, almost 3% positive. I don't know what the ETF's doing. The ETF's up 2.77. And so that is one I'm definitely going home with, sticking with right now. And for the reasons, again, got that out there as a trade idea. I told you that's a volatile little sucker. I mean, if we do gap down big next week on Monday, for whatever reason, the market really gaps down hard, Bitcoin will almost certainly break that support and go down big. So that's one you got to be careful with. But that's also one that you can trade futures. That's why I showed the BRR. or you can use the IBIT if you don't have a futures account. I completely understand. Plus, the contract size is big in Bitcoin. BRR, two contracts right now is $844,850 as I speak. So, what is that? 200? Yeah, that's a big exposure to Bitcoin. So every contract could then have 425,000. But they do have the MBTs, guys. Sorry. If that's too rich for your blood, MBT is called the micro Bitcoin. It trades exactly on the same levels of BRR that I showed you. Same, uses the same chart, same price point. It just has a smaller multiplier. A multiplier is how many times the index. That's how futures work. Again, I can't sit here and give you a crash course on futures. You can read up on it. The multiplier on NQ I think is 20, if I'm not mistaken. You take the price of the index and multiply it by the multiplier, and that tells you how much net dollar value you have exposed to the index. And they also have minis for everything. You can MNQ if you don't like the NQ, it's too big, but you want to dribble in futures, MNQ. And believe me, I don't work for any exchanges. I don't get paid kickbacks on this. I'm not selling anything. I'm just showing you what you can trade. MES, I think. I don't know for the ES, but again, ES is slower. Doesn't go up and down as much as MNQ. And for the Russell 2000, I've been covering that lately. RTY is the regular contract, but then they have M2K for the mini Russell 2000 futures. So that lets people get kind of their feet wet if they want to take smaller contracts. The same thing and use the same charts that I give you on NQ and all that. Oh, by the way, while I'm on NQ, remember the futures I gave you this morning? We had fallen to that level. We'd taken it out. I told you I'd be okay if we went down to the next one, which I still am. It looks like we're going to. We're almost there now. So this morning I told you, there's good support, even better support, or just as good, just below. Here's that bear flag. There's that measured target. This is exactly right now where we're at as I speak. And again, it's pretty much this morning's low. So if you take the move from the flagpole, that's what I'm dragging this line. Take it. That's what I did. I precisely measured it all the way down to the bottom of the flag. Add that to the highest point. This is how you measure a bear flag pattern. Add it to the highest point of the flag just before it breaks down. And then that gives you your measured target. I've moved things around, but there it is. And so we have a perfect measured target of the bear flag remember on NQ it was a little better. ES got a little long, but NQ, had that form there. And so that's been met as well. So you've got support. You're right between the goalposts of two support levels right here. Good support levels I gave you months back. And this was a target hit today, and there's the next one down in close proximity. Oversold, potential divergences. So that's it. I'm going to wrap here. Again, something crazy happens, I change my mind, I'll let you know. Otherwise, I'm going to go long. And then I'll, come Sunday evening, if I like what I see and there's a headline or no headline, whatever, I always pick things back up Sunday evening, and then I decide that's when I'll start layering back in, adding to or subtracting. If I don't like what the market's selling on Sunday night when the futures pick back up, I can close out those index longs and Bitcoin and whatever related stuff like that, and or even reverse it, meaning go back to short. I doubt I'll reverse. Usually this is just me. I won't chase. I'll just realize that, hey, I tried to pick a bottom and it didn't happen. So that doesn't mean it's just super dangerous to start getting in. There's the next big support down there, all the way down there on NQ. But when you start shorting, when the market is this oversold, you are playing with fire. You're playing Russian roulette with not one, but 3 or 4, maybe even 5 bullets in the chamber. Because if we do that, if we go down to T4 next week, I can all but promise you're going to have a headline come out of Washington. It's either Trump he's going to watch. This will happen, whether it's maybe not next week. This will happen as the bear market progresses and we get closer to my targets. Trump will start talking about banning short selling. I'm almost waiting for it. I'm waiting for it because I'm going to short that rally when it comes. It'll scare a bunch of shorts. I've been through this. It's not my first rodeo. They've talked every time. 2008, they start talking about banning short selling. They even put restrictions. That's where the market circuit breakers will kick in, where you only get short on an uptick. But I'm talking an outright ban of short selling. let them try it. They'll try it. They'll try to scare the shorts out. Short selling is absolutely necessary for liquidity in the market. Either way, I'm getting ahead of myself, but they will come in and take some drastic measures, be it a intermediate rate cut or the threat thereof by Powell. Some market manipulation from via the Fed and or DC or something coming in there. So yeah, that's it. Crash potential's higher now, of course, infinitely higher than it was here because of the system, the chances that something can break, as I talked about earlier. But I don't live in fear. I'm going to say, I think the odds are actually just as good now for an explosive short covering rally as they are for a big drop down. So they're almost bilateral. I wouldn't bet hard either way, especially heading into weekend, but I'm going to lay my bets to the upside as we head into the weekend here. I just want to share that with you. And if I'm wrong come Monday morning or Sunday evening, I'll make any adjustments necessary or depending on where we're at, maybe even add to those positions. All right, guys, hopefully that all makes sense. As always, if you have any questions, and I've gotten a bunch of good ones lately, feel free to post them there. I'll be shutting down for the day soon. I'll probably watch it into the close today, but maybe not. It's been a long week for me. I'm feeling much better, fully recovered from the surgery and all that now, so everything's back good. But I've got just a ton of things to do around the house and just want to kind of kick back. I've been, I was up early today, watching things in the market and all that. And so I'm going to take it easy the rest of the day. So this may be my last post. And if not, if I see anything compelling before the close, I'll get out to you and or answer any questions if I catch them before I shut down for the weekend. All right, guys, this has been Randy Finney with Right Side of the Chart. Have a great weekend.